It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com, joining us from the CBOE. Glad to see you both this Thursday morning.
Good morning.
So let's start, Alan. You're looking at NOV, used to be National Oil, well, Varco. Tell me a little bit about this one. Just like many of the oil stocks, it is a higher for this year. In fact, up over 40% this year. Tell me a little bit about NOV Inc.
Well, I wanted to start on a positive. Now, I know Ben's favorite situation is seeing a test reject of lows or highs, and we had that in oil here recently when it was been trading sideways between $85 and $95 a barrel. It tested the downside. Now we're back inside that range. And what we've also seen, more importantly for us as traders, is that key reversal, a weekly key reversal in the dollar index back at the end of September. So it made new highs, but that had a lower weekly close. And we haven't tested those highs once again. So that's a positive for commodities and a positive for oil. So looking at NOV, I'm going to put this on my list in the last couple of big threes that we've done. We've talked Schlumberger, MRO, Oxy, and Halliburton. So this isn't just a flyer. You know, you want to trade what's been the strongest, and obviously the oil sector had great risk reward on this latest pullback. So this particular stock's been mostly between 15 and 20 and 2022. So a breakout of the range targets 25. Yes, we have earnings coming out, but what I'm going to do is mitigate that issue. You can't avoid earnings. It could be a catalyst by buying a May option. May of 2023, the $15 call, again, at that support level. That option's trading for about 6. It's got 210 days of time, an 80 delta, and that option will gain nearly 100% if we get to that 25 level.
Well, it's definitely been moving higher. I mean, it's so evident this recent leg up that we've been seeing. In fact, it's been green the whole year, the whole 1 year. I mean, it's pretty rare to take a look, particularly in a market that's been beaten down. This has been a winner. Your thoughts here, Ben, as you take a look at this chart?
Well, when I look at the chart and hear Alan's analysis, I take that as a very glass half full look at what we're seeing in terms of shares of NOV. I'd have to agree. Something to get excited about for the bulls right now on the more intraday granular time frame. But as we look at the bigger picture, you'll see what's got me a little bit concerned here. First and foremost, the move that we saw. And these are 30-minute candles. So we're going back to the lows from September around 14 to just shy of 20, an October breakout above last month's highs. But again, something to get excited about for the bulls, but still relatively contained as we take a step back. Look at how the 4-hour chart shows that, well, we've got some highs from, we've got the June highs up around this 22 level, which coincides with the highs that we saw in the middle of April. So the 4-hour shows how the move up that we just looked at not only, well, it took out the highs from September, but August, July as well. But also notice, again, there's a double top around 22 to contend what's here still. So also, I do want to point out, as Alan pointed out, we did have a higher low recently. So we have seen a bit of support off the lows. The dollar did reject recent highs, and all of that, again, as mentioned, somewhat bullish. And you can see through the middle of this range, which I always talk about, opens up a door for a retest of the upper extreme of the range that we've been in. Again, going back to the beginning of April, that's up around 22. So there still could be some room to run to the upside here. But as I look at this range here, again, 22 to 14, which is really 24 to 14, because you have to kind of include that spike here, right? We didn't include that. That's that spike that we saw back in end of February, beginning of March. So you've got the run up to 24, but look at how this is all just part of a bigger picture range that's been forming. It's balance area number 7 and a trend environment to the downside. It's very well defined. You've got 7 really well defined areas of consolidation that formed at lower and lower levels. Alan, I'd agree. I mean, through the middle of this balance area opens up a door for a retest of the upper extreme, but you still got hurdles up and through 20. I think it is 26, 28. I'd be a little bit more convinced. Until then, I think this is very random. And again, yeah, on the intraday, there's some bullish sentiment here. You can see it in the price activity, but on the bigger picture here, nothing to indicate that the trend environment lower has been invalidated.
Right, and when you take a look at this and you see the moves here, you saw the legs down, but then the recent moves. Do you have the conviction? He said you have a glass half full view, Alan.
Well, I would obviously say that oil's well. Oil's done well. There's always price pop potential when it comes to crude oil, and that's the latest concern for me. higher energy prices are usually a optimistic sign that the economy is moving along because that demand is there. So let's see what happens. Let's remember, oil prices at this level are at half of what they were in 2008 if you adjust for inflation, the 3% annualized inflation rate. So we'd have to get back above $200 a barrel just to get to that 150 price that we had in 2008. So, that obviously it could be a big issue down the road for people psychologically, but higher oil prices, even when oil prices were at those levels, we saw the stock market, the oil's around the $100 a barrel level. The stock market performed very well from, 2011 to 2014.
All right, let's move to the next one here and we take a look. 66.71 is the current level of our next trade here at Gilead Sciences. What do you think about this one? Because this has been down this year, down about 10%.
Well, this is a stock, again, in a sideways range and a big wide range between 57.5 and 67.5 for the last 8 months. A breakout of that range targets 77.5. So right now we're just moving above or trying to see if it's going to move above this range area here. So I'm looking at this with, again, a May option. Now the earnings come out here on the 27th, just like the NOV play, but again, to mitigate that, I'm buying deep in the money options with plenty of time because the time value component is what's impacted by the increase in volatility that you sometimes get just ahead of earnings. But at least if you're going a week out, I'm comfortable with that. I don't like to buy a couple of days before earnings because those options can get inflated and they deflate once the event happens. So I'm looking at a May 57.5 call. Again, that's the bottom base of this range here. That's deep in the money, almost $10 in the money. It's trading for about $11.50, 7 months of time. Again, if this breaks out and moves to the measure move target of 77.5, the option gains about 75%. And this option is only $1 more than buying January. So again, buy more time than you need, buy enough time to be right, and let's see how this stock responds as we approach the top of the trading channel.
That's interesting. Wow, out to May 23rd, but feeling bullish with buying this call. Tell me, Ben, your thoughts on Gilead Sciences.
Alan, you had me at this stock has been range bound. The rest of it I just kind of got lost in because that's what I see here right now. Not a lot of conviction one way or the other. I want to dive first and foremost into the hourly candles, the trade we've seen since the beginning of August. We're talking about a $10 range. I mean, tough to get excited about GILD as we've been for the most part. Just again, talk about contained. Here it is. I mean, in the beginning of August, we rallied up to 69.20 to the middle of September, and since just chopped sideways. Now look at this range, 59 to 69. I just want to point out as we look at a little bit more time here and go to the 4-hour candles, you can see that 59 to 69. Okay, we'll call it 57 to 69 because we do have a pretty well-defined double bottom here that goes back to June, the March, February lower levels that we saw. So 57 to 69 is what I really look at here as I look at this range here, just as we take a step back from that hourly intermediate time frame. But another step back into the weekly time frame shows Nicole, Alan, you're familiar with this, a pattern that we've been looking at for a while, and this has been repetitious on many of these stocks that we look at in this bear market environment that we've seen with the broader market selling off. You get the high conviction lower. We saw that throughout July, the late summer of 2020 into the fall of 2021, where we went a bit more sideways, but for the most part here you can see that we've been consolidating in this range. Again, here we're talking about, well, we'll call it right around this 68, 69, 70 level, all the way down to, again, the medium of this range here, around the $60 level. But I just want to point out here that this is a pattern that we've seen repeat itself over and over again. It's a high conviction bear pattern right now, but as long as we're within this range, kind of limited in terms of conviction, sort of right in the middle of, if we roll over here, opens up a door for retest of 56, the lower extreme. Strength here opens up a door for retest of the upper extreme. But guys, again, a pattern that's been playing out over and over again, a market that's just very much range bound, limited in terms of conviction at this point, but still, from what I'm seeing, a bearish type flag playing.
Okay, so the range bound, some bearish flags, not necessarily a true buyer at this point when we hear from Ben. Alan, are you feeling this way about Gilead and some of the other pharma-related names? I mean, is this a broad brush for
Well,
you,
there's
or is
two.
there something special
There's
about
two
Gilead?
ways to approach this. There's two ways to approach this pattern. Now, I'm a guy that anticipates a breakout. A breakout would be the confirmation of this range. So, a confirmation of follow through to the upside. So I'm looking to do that, but with a May option that's got 7 months of time. And again, it's $10 in the money. It's a deep in the money option. It's a stock substitution strategy, limited risk. Now, I do want to let Ben know that, I lost him right after my range-bound comment, but I do have a secret sauce that I keep a track of, and it's the insider's accumulation of leverage positions, and that's been happening in this stock. So oftentimes, smart money has some inclination that the stock is going to make a move, and that's one thing that I add to the pot when I position myself with these stocks that haven't made the move yet. And Ben's always going to say yet.
That's the big part of it, right? No one knows. How about AMD? We've seen this group getting hit hard. It hasn't been It hasn't been very good of late. I mean, there's just been no relief. Even when the markets, we've had these bull market rallies, we just have not seen participation with semis and these kinds of tech-related stocks. And what about AMD? Tell me a little bit about this one.
Well, it's risk reward, but it's also a macro play. And the question is, was this sharp sell-off and rebound, that test and reject that we saw in the S&P recently, and then that bounce, is that a bottom in place? Now, there's a lot of upside potential, obviously, if this market can stabilize and turn and get back above 3,900, which was an important pivot point that we had for a long time. And that's why we saw the disappointment when it broke below that in the market. Looking at AMD, it's down from 165. So recently it's been trading for the last 2 weeks between 55 and 65. A breakout of that range targets a modest move to 75. So the way I'm looking to play was to buy a $50 call, but give me the right to be long this stock from $50. Again, the low on the stock's just under 55. So $50, that option's trading for about $13.50. I see bullish divergence, meaning it made new lows, but not new highs in implied volatility. That's often a sign that the sellers have run out of strength. And so the midpoint of this recent August leg from 105 down to 55 is also around the $75, $80 level. So there's some upside targets that are very attractive. That $50 call would about double in value if we get to that 75 level with that measured move target. So again, it's 3 months of time. It's being long from a super discounted level, $100 and some below the highs for the year. So it's something that is a chip to put out there for a bounce in the next 3 months. There should be some sort of squeeze. Then you want to see how it reacts and what kind of buyers come into place after that.
I mean, you have to have, these markets going from 165 basically to $55 is what it did in this last 52 weeks.
Right.
And that's really hard for investors to stomach. Would you take a chance, Ben, the way Alan is?
It's an ugly chart, to say the least, Nicole. And Alan answered the question. You know me too well, Alan, by far.
All right, the segment's finished.
I mean, guys, when you look at this chart, we were just talking a minute ago about GILD, that a high conviction to the downside pattern, sideways consolidation. We looked at it on the weekly time frame. Look at the hourly candles here in AMD. You'll see that repeat itself over and over again, but over the long term, what you should see here is a very well-defined trend environment to the downside, again, with lower highs coming into play. You've got consolidation at this lower level, zero rejection, simply put, in terms of what we've been seeing. And I hear Alan tossing out the ifs and, we could, but at this point, price is king still in this market, and that'll never change. And we still have yet to reject these lower levels. Simply put, the bear trend or working assumption that we're trending lower is still in place. And Alan, from back in the really high energy trading floor days, we used to say, when you'd look at a chart like this, the only reason to buy into this thing is if you don't like money, right, would be the joke. Okay, so moving on from AMD, as we look at the daily candles, you can see not only that strip, that trend, that run that we saw through 100 down to recent lows around 55, but look at the series of lower highs coming into play here as we come off of the highs from last fall. Remember when the NASDAQ topped out recently, again, around this 100 levels where we retreated from. We've been watching the market relative to the July lows, the June lows, and look at what AMD done compared to, well, the Russell's still yet to take out these June lows. The NASDAQ, the ES and Dow have, but again, we haven't seen follow through to this extent in terms of what we're seeing here as far as AMD. I also wanted to point out as we looked at one more time frame here, the daily, these areas of value that we always talk about, they help us determine trend, right? I often remind us of that. They help us eliminate emotion and sort of the connectivity that traders feel with price activity once they get in trade. And you just kind of establish that we're seeing value move higher. You look for areas to participate in that trend up and you hope it continues. If it doesn't, well, you get out. In this instance, if you were buying into AMD on the move up here, this run up we saw to 165, you were signaled there was trouble around 110. Everything below that has been weakness, bearish, if anything, and trend environment opportunities to the downside. Taking a quick look at this one, down almost 60% year to date, guys, below the 50-day moving average, below the 200. I mean, AMD, as I mentioned, an ugly chart to say the least here, not one that you want to, I think, get ahead of here or necessarily say that we could see a turnaround. I'd rather see it turn around, take out some of those key areas that were established on the way down. Until that happens, again, the working assumption this thing is trending lower remains intact.
That chart, that long-term chart, it was like a great adventure ride. That big, long free fall at the end. Brutal. So you only make this trade if you don't like money. Alan, final thoughts?
Well, I always bank on my bullish divergence because that's a shift of psychology. When the short sellers run out of strength, and you can see that in implied volatility. Now, speaking of banking on it, just a few weeks ago, all of the banks had this same bullish divergence. We saw a big bounce collectively, obviously, with earnings season. So that's how I identify that sentiment shift and how I identify that bottom in place when it looks like it's bad enough to buy. Now, again, I'm using limited risk option. I've got plenty of time. I'm long from 50 after $100 and some drop. You know, it's something that I'm comfortable with from a probability standpoint, a risk standpoint, and a dollar standpoint. And it would be a confirmation once we get above this, you know, the 60 level is important to me, and we did that this week because it's a midpoint of this range. If we get above 65, then you're going to see some of those people that have been short this stock for a long time have tightened up their stop losses down, and that will trigger some stops on the upside, which will encourage some more buying and feed this a little bit higher. I'm just looking for a modest move. I'm not looking for a comeback, a modest move.
All right. And, you know, and I'm going to fight back and say I think there's a lot of energy on that trading floor. It's not like just the olden days that had energy and great. You know, we've had some very busy days.
He was talking about
with Twitter.
He was talking about us having energy. Ben and I used to have much more energy is what he's talking about.
All right, I'll give you that. Gentlemen, thank you so much. A beautiful Thursday, a great big three here where we took a look at NOV, Gilead, and AMD. Thank you, Alan Nuckman, Chief Market Strategist, BullseyeOption.com, and our own Ben Lichtenstein, host of Futures here on the TD Ameritrade Network. Thank you.